In this video, we will unpack all of your Tesla stock breaking news today and what Elon Musk just said. But first, hit that like button, subscribe to the channel, let me know what you think about this information down below in the comment section, and let's get started. Alex on X writes, I strongly recommend anyone who still claims that Tesla is a car manufacturer to use this weekend wisely. Think hard about it and change your stance because from here, it gets really embarrassing. Elon Musk responds and says Tesla is an AI/robotics and a sustainable energy company. I mean, that seems obvious to you guys, like Tesla is really not a car company. They're more a software, AI, robotics, sustainable energy company like Elon said, but a lot of Wall Street still believes Tesla is only an auto company, that Tesla only builds cars. I think that just shows how wrong Wall Street is, and the logic in which Wall Street operates on is going to cause them to lose a lot of money in Tesla, and it will be to your benefit if you understand the simple logic of Tesla is not an auto company, or not long-term an auto company. This individual on X says Tesla's fleet is the most important part to solving full self-driving. He says no significant component will be left out because it's an enormously valuable and difficult to substitute resource. And Elon Musk comments here and says, yes, the reality is far too complex and weird to solve the data problem in simulations. Because for every obstacle, construction site, even the way the sun shines on the road, right? The way the sun shines on the road can tell you if concrete's wet, right? If there's new asphalt that was just put down. There's so many different variables that really, I mean, simulations can help for certain things, but the real powerful part of Tesla's FSD software and the development so far is the amount of vehicles on full self-driving. Just that aspect alone is a moat for Tesla. For GM, Toyota, it doesn't matter. They just don't have the data, not even close to enough data to start really a product that could compete with Tesla's FSD. Elon Musk likes this tweet from Brett Winton. He works at ARK Invest. He says any prioritization of the Robotaxi program should be read as a massive positive for Tesla. And that's exactly it. The Robotaxi network, in terms of forward-looking profitability, there's nothing bigger than that, right? Tesla becoming the largest automaker in the world, surpassing Toyota that sells roughly 11 million vehicles a year. Tesla today at about 1.8 million. For context, GM sold about 2.6 million vehicles last year. Even if Tesla starts selling 20 million vehicles a year, the Robotaxi network is by far more important in terms of profitability. And as you know, well, profitability is the thing that drives stocks higher. And that is precisely why Tesla's stock rallied almost 4%. At one point, you were up over 4% Friday in after hours. So it's safe to say this week, it's gonna be a little bit crazy. And we'll talk about that more in the next video. And trust me, you do not want to miss it because we have some big economic data as well coming out this week, which could be a massive positive for Tesla stock as well. It really does feel like the perfect storm could be setting up this week for Tesla stock. But I do want to remind you guys that on Thursday, you had that huge sell-off in the NASDAQ. The NASDAQ was up 1%, ended up closing down 1.5%. That was the biggest end of the day sell-off you've seen in a long time. And this volatility may not be gone entirely. In fact, it's possible the broad markets, the S&P and the NASDAQ, fall this week. But Tesla could do very well. And if I'm correct, and the data, could cause that. But I do want to really highlight this here in this video. This volatility you've seen on Thursday, it was twofold. It was Fed comments, but mainly geopolitical tensions. If you look at the latest headlines coming out from the Israel-Iran situation, it says Israel is prepared to handle any Iran scenario. The defense chief says this was about 2 hours ago. We're waiting to see what Iran's response is going to be from the Israeli bombing of the Iran embassy in Syria, in Damascus. So We don't know if that's going to spread into a larger regional conflict. We don't know what the implication will be specifically to oil. And I think that's why the market sold off. Oil went up. Gold actually sold off. And there was actually a lot of money that went into bonds, which shouldn't have happened because the Fed was super aggressive. And I've showed this here on the channel. But if you take a look at the oil tankers, that go through the Strait of Hormuz, it's a lot of them, okay? Like 30 to 40% of the world's oil supply every day flows through the Strait of Hormuz. If there's a conflict in Iran or just tensions in general, well, you may see less traffic going through this channel, and that could have upward pricing pressures on oil, and that really goes into, everything. This cup I'm drinking coffee out of. It's actually hilarious. I don't know if you guys can see that too well. Maybe. But everything. This, my phone, like the mic, the computer, this Tylenol, doesn't matter what it is. I didn't develop it here in my home. I bought it from somewhere and it was shipped from somewhere else. Everything is touched by oil. And I think that's the reason why you seen the volatility last week. And we still don't know what could happen here. So uncertainty is usually worse than the outcome. Wouldn't surprise me if we do get some kind of action from Iran, and maybe the markets take that as positive because, hey, it's over with. There's no more uncertainty, but we just don't know that until something happens. And a lot of people are expecting that could happen in the next 48 hours or so. So be on the lookout for that. Who knows? And if you guys have not done so already, go ahead and follow the X account, my X account. It is Michael Tyler over there. I wrote this post that I would like to share with you guys. I said this moment in Tesla history will be like the iPhone moment in 2007. In hindsight, everyone says they should have bought Apple back in 2007. Like, I should have known better. Apple was going to be successful, right? That's what a lot of people will say that are older today. Now, I say today's iPhone moment is FSD and Robotaxi. And mark my words on that. 20 years from now, 10 years from now, we're all going to say, dang, I wish I knew better. I should have bought more Tesla. I should have been invested in Tesla. I have also heard a lot about this Robotaxi network, and there's a big debate on what the cost will be to, put your Tesla on the Robotaxi network, if that's even going to happen in general. I know Meet Kevin made a video saying that it's going to be cents on the mile to, have your car be a Robotaxi. That's not exactly correct. Here's the deal. This Robotaxi network, obviously Tesla's going to run it first. They're going to develop the Model 2 for the Robotaxi network first. You're not going to be able to put your Tesla on the Robotaxi network for probably many years, okay? There's a little bit more of a liability concern there, even down to like insurance. Do you need insurance on your Robotaxi, right? Do you have insurance for when you drive your car and Tesla takes liability when it's on the Robotaxi network? Who knows? Lots of complicated liability that could go along with that. But I mean, that's probably a couple years away. No, on August 8th, you're not going to be able to sign your car up for the Robotaxi network. That's not it. Okay, it's probably going to be second half of 2025 before we even get any Model 2s for the Robotaxi network. I think Elon is still following the same timeline. Now, a lot of people have been debating what the cost will be like. And again, Meet Kevin, I mean, I've watched him for years, and some opinions I agree with, some opinions I don't agree with, and that should be the same for you guys watching this channel or the next channel. My opinion is that's not correct. There will either be a base fee, like $10, right? Or maybe it's on the distance, right? If you're traveling 10 miles, 15 miles, maybe it's a $10 base fee and 15 cents a mile after that. Or maybe it's 50 cents a mile, but it's still going to average out to be maybe less than an average taxi ride today, but not, pennies or just a couple of dollars to use the Robotaxi network. That's not it at all. So I just want to put that out there because I think a lot of people have misconceptions about what the Robotaxi network as far as pricing is going to be. and it's not going to be cents on the mile. If it is, there's going to be a large base fee with maybe 10 cents, 15, 25 cents a mile added on per mile. Google Trends data for full self-driving is through the roof. I mean, it's at 100. The data is not finalized all the way, but you're by far at the highest levels you have ever been, and then that's really no surprise, right? We should expect to see full self-driving search trend activity, you know, at all-time highs. But question is, where does it really settle out? Does this start a new trend of putting full self-driving on people's minds and on their radars, and potentially looking to buy it, even if they don't after the 1 month free trial? There could be people that buy FSD months and months and months later. And from my understanding, anyone that buys a new Tesla will get a month free of FSD anyways. So every time Tesla sells Teslas, well, that's likely going to lead to a higher adoption rate because of the free trials. But I think ultimately Tesla sees this as a two-sided benefit. Sure, maybe the adoption rates go up quite a bit by doing the free trial, but in the process of doing the free trial, you're adding a lot more miles to the cumulative miles driven, thus helping to train FSD even more. So it's really a two-sided benefit for Tesla doing these FSD free trials. And if we go ahead and take a look at Google Trends data, you can see the CyberTruck here is in purple. For whatever reason, it X'd out the tab that I had open, probably because I have like 80 tabs open, but neither here or there. The Model S is in green, the Model X is yellow now, and the Model Y is red, and the Model 3 is blue. You can see here over the last, I have this pulled up to 90 days in the US, by far the most searched Tesla model is the Cybertruck by a long shot, okay? And I think this was also part of Tesla's strategy. They're going full tilt on Robotaxi. That's fantastic. But really, before the Cybertruck came out, that's when you see most of the price cuts. And I think the Tesla team did that by design, right? You lower the price of Tesla so more people can afford them. You unveil the Cybertruck and start delivering the Cybertruck, you're going to see a halo effect from the Cybertruck, and that halo effect is going to really bring demand into the Tesla brand entirely. So now you don't have to cut prices as much, if at all, to stimulate the same demand you otherwise would have by cutting prices, because the Cybertruck is boosting demand. I mean, this kind of search activity for the Cybertruck, there's no way it doesn't rub off into the Model 3 or the Model Y. That's kind of the way I'm looking at this. Now, this is specifically looking at the United States where the Cybertruck has launched. If you look at worldwide, the Cybertruck is still pretty close, right behind the Model 3. The Cybertruck is at 54 on average, and the Model 3 is at 61. The Model Y is at 66, and recently the Cybertruck was the highest at 100. But has since come down a little bit. And this is looking at the average over the last 90 days. So technically right now, the Cybertruck is the highest, or was just the highest. I don't think this data is yeah, I'm tripping. The Cybertruck's at 85. The Model 3 is at 62. The Model Y is at 76. The Model X is at 18, and the Model S is even at 25. So search trend activity has really picked up even in just the last couple of weeks here. And if you look at the last 12 months, Cybertruck by far the highest at 45, the Model 3 at 32, the Model Y at 39, the Model X at 9, and the Model S at 13. Like, guys, this is impressive, okay? This is not supposed to be happening this time of the year. This is not supposed to be Tesla's best, quarters. And you're seeing some of the best search trend activity you have seen in a very long time. This is better than Q3, Q4, Tesla's prior records of 2023. So maybe demand really does pick up in Q2. So I wouldn't count Tesla out for beating expectations for Q2 deliveries based on at least this Google Trends data. And if there's one thing we know for sure, Tesla has a lot of inventory that could help them beat Q2 delivery targets. You do have the Model Y sitting up here at almost record high levels of inventory at about 9,400 total vehicles globally. That's a lot. The Model X sitting at about 2,500, the Model 3 at about 1,900, and the Model S sitting down here at about 1,300. So you've recently seen a jump in all Tesla inventory numbers, but the Model Y is especially high. I mean, way higher than these other models down here, the Model 3, the Model Y, as well as the Model S. So yeah, Model Y definitely has a ton of inventory. And Tesla continues to run about 4,000 different ads globally. That could also help feed into some initial sales of Teslas. Keep in mind, Tesla traditionally has not advertised. They started advertising over the past couple of months. And normally advertisers like McDonald's, they don't advertise so you go out and buy McDonald's. They're not expecting that to have some kind of immediate impact to their business. But it keeps the brand alive in people's minds. For a company like Tesla that has not advertised before, it could potentially drive stronger quarters, at least in the relative short term, right? The next year or two. Now, this is actually interesting. On StockTwits, the sentiment for Tesla is actually neutral. 1 point under neutral, really. If neutral is 50, you're at 49. So very strange. And 1 day ago, you were at 38, which was bearish. Very strange. Message volume is low today at 40. Yesterday was high at 64. That makes sense. Participation ratio sitting at 55, which is still considered high. Option activity on Friday was quite positive in Tesla stock from hedge funds and institutions. You had 1,550 total trades, totaling $845.25 million with a positive order value of 65%. In totality, over the past week, you've seen 4,930 orders from hedge funds and institutions. These are options trades, these are sweeps, these are block trades, or just overall large trades, totaling $4.84 billion with a positive order value of 48%. Tesla is very short. Still one of the most shorted stocks on our markets currently. And I think that sets you up in an interesting way heading into next week where, the bears have been so convinced that Tesla is going to have a terrible 2024, they haven't even thought about the Robotaxi network. And now you have an event coming on August 8th. That's kind of problematic. You have 3.71% short interest of free float, the highest you have seen in about 2 years now. $17.58 billion currently in short positions. Even on Friday, cost to borrow fees were almost 10%. That generally says that there was a lot of shorting activity even taking place on Friday, and you have almost 103 million shares that are currently sold short. So simple math there would say every $10 Tesla stock goes up, shorts are going to lose $1.03 billion. Like every $10. So if Tesla goes back to, let's call it $200 and the stock's $70, shorts are going to lose over $3 billion, about $3.3 billion, just if Tesla gets back to 200. So shorts could be getting ready to cover on short positions, and that could be part of why Tesla stock went up 4% Friday in after hours. It's probably better to cover first than wait and see what happens. The most recent AI investor sentiment survey, still very bullish, but neutral investors are starting to pick up a little bit more weight here. You have 47.3% of investors that were bullish as of April 3rd. The prior week, 50% of investors were bullish, so that is down about 2.7%. Neutral investors went from 27.6% to 30.5%, and the bears are just staying roughly right at about the same level, around 22%. 2 weeks ago, you were at 22.4%, and last week you were at 22.2%. It goes up and down a couple points, but about 22% of the markets are pretty bearish right now. The percent of stocks above their 50-day moving average currently sitting at 53.61%. You were up about 1.5% or maybe I should say 1.5% of stocks broke above their 50-day moving average on Friday. Not that great considering how strong the indexes were on Friday. And again, I think you could be setting up for a little bit more of a broader rally in this week ahead, if I am correct. And that mainly comes down to the data that will be coming out, and I'll explain that logic more in the next video. Now, Tesla stock on the charts is sitting at about $171.18 per share. So that was great, but you're still like right here. You're still in the middle of the last couple of trading days. Now, it was very good to see that 4% rally Friday and after hours, but you still need to rally further, likely above 178, before you can start to target, the 188, 190 level. So if we can see a strong continuation coming tomorrow morning, that most likely sets you up for an even larger rally if we get above 178. Now, if we find rejection at 178, if we find resistance, that's not as great. If we break out above 178 and we're back into the 180s, which a lot of people are calling for even on Monday, then that's going to look much better for the ultimate march back to $200. But keep in mind, Tesla does have earnings coming on April 23rd, and that is going to be really a huge catalyst for Tesla. We want to know, number one, are Tesla's margins going to stabilize or even increase from here? Meaning, is profitability going to get better or worse? And then number two, what's the deal with the Model 2? Are we going to get that in a mass production form in 2025 still? Are we going to get the Robotaxis being produced in 2025 still? Is that going to get pushed out further? I'm not exactly sure. And some people are under the assumption that on August 8th, you're going to be able to turn your car onto the Robotaxi network. Obviously, no rational person should expect that. That's just a little bit too soon unless Tesla has some kind of huge software update up their sleeve. Anything's possible. But what's the timeline for all of these things? If we have a timeline and guidance, analysts on Wall Street can start to price out and forecast what Tesla's profitability and what Tesla's revenue and overall net margins could be over the next couple of years. And that's what will send Tesla stock higher. Again, shorts covering all of that is good as well. But you just want some targets coming from Tesla. And I think we get those on Tesla's earnings April 23rd. So that's a huge catalyst. And this could be, as I've said before, the last great buy the dip opportunity for Tesla stock. So that is going to go ahead and do it for this video. Hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. The next video is coming out at 8 p.m. I feel like the YouTube algorithm does not notify everyone of those 8 p.m. videos. So just keep in mind that video will be coming out 8 p.m. sharp. If you want to watch it, highly recommend you do watch it. It will be posted, but you might not get notified if you do have notifications turned on. YouTube does some funky things sometimes. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Next week, well, this week, technically starting tomorrow, is the start of earnings season, and you will have your big banks, and then the following week, you'll have more banks, and you'll start to get into some big tech earnings in the not-so-distant future. So thank you for watching. Enjoy the rest of your day, and I will see you in the next one.